Hello and welcome everybody to today's live commodity market analysis with myself, Phil Carr, at the Gold and Silver Club. So during today's live session, we will be covering live market analysis. We will create a watch list of trading opportunities. We will be going through an overview of the market's portfolio performance, and also, of course, we'll be answering questions throughout today's session and bringing you up to speed on commodities. So first of all, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the world's #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading. So as internationally respected experts, our analysis and our opinions on the metals, the energies and the agricultural markets, they are routinely sought by major financial television channels and publication, which include Bloomberg, Reuters, CNBC, Global Banking and Finance Review, the Wall Street Journal. Of course, it's a pleasure to be here today on FX Street as well. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate substantial monthly income through commodities using our signature trading strategies. So for more information on the Gold and Silver Club and our expertise, please feel free to visit our website, which is www.thegoldandsilverclub.com. Right, so we will get straight into it. We'll go through a bit of research, guys, first, and then we'll talk you through the commodity markets, some of the opportunities that we are seeing as we head into the US session on Thursday, and of course, as we head into Friday, as we continue to transition throughout August. So last week, we saw quite a major move on the oil market. We saw Brent crude oil jump 3% to $45 per barrel, and we saw WTI crude oil jump 3.2% to 43 USD. So with that, we did see the $40 per barrel level hold significantly last week. It's the 50% Fibonacci level as well from the swing low of 2016, which sits near $27, up to the swing high of 52, which we reached at the end of May. And we saw that significant move off reports that OPEC members will push a production freeze when they meet in September. So that has caused quite a significant uptick in oil prices over the last week, certainly into the close last week. We saw a significant move which followed through on Monday. We'll take a look at the oil chart very shortly, where it's sitting in context to price right now. It's definitely a market we are watching very closely. Also, be aware of the amount of investment demand that we're seeing at the moment in the commodity markets. So we have right now seen the biggest inflows in 2016 since 2009. It's hit the highest level of inflows into commodities on record since the financial crisis in 2008 and 2009. We've seen very strong inflows into commodities, most notably the precious metals, then the metals such as palladium in particular. Actually, we saw a significant jump just yesterday. So for those of you who might trade that market, palladium broke out to 14-month highs just yesterday, and it jumped 7% to the upside. We've also seen continuing strength in the precious metals, with silver up 45% this year. Gold is still up over 26%. We've seen significant inflows into these markets between January to July this year. We are still seeing commodities get bought into as we see them transition from a bear market that they've been in over the last 4 years as we move into a bull market. In fact, even sugar this week again came very close to breaking out from its 4-year highs. Sugar up over 29% now in 2016. Now, we mentioned this last week, but it's worth just repeating again for those of you who might not have been on the session last week. You can see the overall performance of the commodities so far in 2016. So silver has been up 45%. And what I will just put on your radar is the fact that silver, although it's up 45% so far in 2016, in the rally between 2008 to 2011, over 2.5 years, that was the last bull market rally that we had on silver. Silver gained 480% in the last bull market. So this year we've officially moved into a bull market with silver, and it's been up 45% so far. So it's only really just starting at this point. We're still sitting around $20 per ounce on silver. There's a lot of upside potential on this market. I would absolutely have that on your radar. Palladium and platinum broke out significantly this week. As I mentioned, palladium actually yesterday broke out to 14-month highs. Gold is sitting still very close to its 2016 highs, and silver is close to the Brexit highs as well. Now, in addition to that, we've also continued to see sugar as a top performer, cotton as well. We've seen a lot of strength in coffee so far this year, and we've also seen good moves on cocoa too, which we'll have a look at very shortly on the charts. Now, I do also want to put something else on your radar as well, which is the seasonality cycles for the gold market at the moment. And you can see here, typically there are 2 times of year when the precious metals tend to be at their best in terms of performance, and that is over the beginning of the year, January and February, and then also as we transition into August and September. It is the start of the wedding season in Asia, where you start to see gold imported more significantly. You get an increase in demand from China and India. What is really interesting is so far this year, a lot of the move which has gained in gold over 26% to the upside, it's come from investment, hedge funds also, which have significantly bought into gold this year, as opposed to perhaps jewelry sales. We've seen a lot of this so far this year come from investment. So far this year, a lot of the move to the upside on gold, we're currently sitting at over 26% up this year. We have seen that come from the West and also from the Middle East, but we haven't really seen China or India participate in a lot of this rally so far. So what does that mean? Well, it means that once they do get on board, once they start to increase their imports, especially as we come into this seasonality cycle, this time of year where you do often see a number of festivals in both in Asia and India and China, where gold is gifted, you start to see imports increase. Then if you start to see buying increase in that region, that could be the catalyst to really get gold going here above the 1400s and much higher. So we're currently sitting very high, well, very close to the highs of 2016. Gold is at 1,344 US dollars. The highs of this year, 1,375. It would only take one decent day's worth of gains for gold to actually now break back above its 2-year highs and build momentum up to the 1400 level. So I just put that on your radar. We also mentioned last week, of course, the Bank of England, they cut interest rates for the first time since 2009. They went ahead and lowered their main lending rate to a record low of 0.25% from 0.5%. So for those, if you were watching that live, if you looked at the price of gold, we immediately saw a rally back up to the weekly highs, just under 1,365 US dollars, within $10 of the 2016 highs and the 2-year highs on that breakout. And I would be paying a lot of attention to this because gold is very sensitive to rising US interest rates. Okay, so when we've seen interest rates on the table in America by the Reserve during FOMC statements, if there is hinting of interest rates, that often cause gold and silver to sell off. Now, since the start of the year, there's been speculation that the Federal Reserve would go ahead with interest rates. In fact, right at the beginning of the year, it was forecast they would go ahead with 4 interest rates, which was reduced to 2. But now we've not seen any interest rates this year. This puts the Federal Reserve in a difficult spot now, given that the Bank of England has now gone ahead and reduced their interest rates as well. And bear in mind that we've got that inverse correlation of the precious metals to interest rates. If interest rates go down, that bodes very well for gold and silver. If the US cannot go ahead and increase their interest rates, that means that we've got a lot of underlying support here fundamentally for the precious metals. For that reason, have them on your radar, guys. Definitely you want those on your watch list. So with that said, let's get into it. Let's move over and have a look at gold. So gold currently, you can see both fundamentally, as I've just mentioned, in terms of demand as well from investors, we're continuing to see good inflows into gold. Right now, gold is holding on to a major trend channel, underlying support. It did pull back on non-farm payrolls last Friday. So we did see this pullback, and we also saw a pullback on silver. Interestingly, that pullback didn't last. We didn't see follow through. Gold and silver got bid back up. They held on to the lower end of their trend channels here. And we've seen here, again, gold holding on to this zone. It actually retraced almost up to the highs it reached prior to non-farm payroll last week. Supportive zones for gold at the moment remain within two major areas. Okay, so if gold might well hold on to this zone, and if it can break out above the highs from yesterday at 1,357 US dollars, that really gives with some good momentum to the upside. I would be looking at that for an additional breakout and follow through, then taking out last week highs as well. If we can get some momentum to the upside this afternoon or into tomorrow's session as well. If gold continues to consolidate here, I still wouldn't be too concerned, even if gold was to sell off and come back at this point down to 1,310 US dollars, possibly retest the 50-day moving average, which is at 1,315 US dollars. Even if we were to get a move down to that level, you've got a lot of underlying support, a lot of demand here. So every time we've seen gold pull back, it is getting bid back into. I would expect bargain hunters to pick up on gold if it did break down any lower. If gold continues to follow through, it holds on to this trend channel, which, by the way, was supported on Brexit, and it was also supported on non-farm payrolls at the beginning of June, which were the worst non-farm payrolls for America in 6 years. You can see this trend line has been a pivotal point here. We also broke out to the upside following on from the FOMC statement about a week and a half ago when the Federal Reserve left interest rates unchanged in America. That also gave a breakout to the upside, and we're back within this trend channel, this zone as well. So I would be looking out for that as a supportive layer. So absolutely have gold on your radar. And gold, if you look at its day-to-day volatility, it typically moves in the region of 200 to 300 points per day. So if, for argument's sake, gold was just to follow through today and just do its normal day-to-day volatility, it could easily bring it back up to the highs of last week, 1,365 to 67 US dollars per ounce. You breach above that level, buy orders will kick in. Give you an example, case in point, platinum and palladium, they broke out above their 2016 highs. Look at the orders which got filled once they got above that level. We saw palladium break out to its highest level in 14 months. These are the sort of orders I would look to get filled. Similar sort of price structure I would expect for gold and silver if they do break out to the upside. Palladium jumped 7% yesterday when it broke out above its highs here. So look at this in terms of the similarities with gold right now. If gold can do the same, break out above resistance, there's a lot of investment demand there, and I would expect good follow through. But you need to also just be watching it closely, because by the time it breaks out above, for example, if it gets above the 1400s, it's going to make, from a risk to reward point of view, a challenge to get into. Right now it's good, it's sitting around 1,343 US dollars per ounce. The risk to reward is better at the moment. If you know what you're doing on gold, there's some good opportunities ahead at the moment. We'll also discuss that a little bit later on in the session with you as well, guys. We get a lot of questions for those of you who would like to become a member of the Gold and Silver Club, get the exact trades that we are taking, how to build into a position, how to know when to buy gold, buy silver, where to position yourself on those trades. Definitely, if you stay on to the end of today's session, we'll just go through that, how you can actually join and become a member of the Gold and Silver Club and get access to all of the setups that we are providing, the trades, and also get access to all of our live trading rooms and our membership academy. Okay, so great. So let me just move it over to platinum as well. So platinum did also pop. It pulled back on non-farm payrolls this week, broke above its swing highs, its 2016 highs, good follow through, closed. It's the highest close that platinum has had here in 2 years that we had yesterday. In fact, palladium as well, this is the highest close it's had in over 14 months. So I would be looking at the correlations here for now, gold and silver, to potentially follow suit, or certainly have them on your radar. If they don't do it today, they could do it as we go into next week. I would be watching those very carefully. So that's gold. If we have a look at silver, similar price structure on silver as well. Silver actually yesterday retraced all of the losses that it took on non-farm payrolls. So the non-farm payrolls, they did come in stronger than expected. They are a lagging indicator. So they lag 1 month behind in terms of data. With that, we got some poor US data come out yesterday, which did cause a breakdown of the US dollar. We saw gold and silver spike. And essentially now you've got a pennant formation on silver. Now, typically when you have a pennant formation, the pennant actually breaks out within the predominant trend. Case in point here being sugar, which broke out actually on non-farm payrolls on Friday. I'll bring it back to silver in a second. This was a pennant formation on sugar, which broke out on non-farm payrolls last week, and it's had good follow through. So when you've got a very strong market, which is in a very clear trend, as is the case with silver here, which is up it's been up over 45% this year. It's still not too far away from the highs here. You can see it's consolidating, but once we can just breach above yesterday's high, if we get some good follow through, break back above $20.80 here, then you're going to be breaking above a lot of key resistance. If you can take out the highs here, which we reached following on from Brexit, then it really bodes well. Get above 21 US dollars and you're up and running again with silver. Similar move that we've seen with platinum and palladium recently as well. So I would definitely also have silver on your radar too. Remember the stats of silver. Silver has been up over 45% in 2016 in the last bull run that we had on silver, which was from 2008 and 2011. And the inflows that we're getting at the moment are very similar to what we saw during that period. All-time record inflows that we have into silver right now from the COT reports, the commitment of traders. So we're continuing to see very strong inflows, and during that bull market run of 2008 to 2011, we saw silver gain 480% over a 2.5 year period. Do bear that in mind, because that could really bode well for future prices here with silver as we're just getting started with this bull market. So yes, if we do get additional breakouts here, I would suggest these are going to be good opportunities to add to positions. Corrective pullbacks have been bought into throughout the whole month of July. Typically the summer months over June and July can be weak for the precious metals. We've had Brexit this year, which has caused a catalyst for some big inflows into these markets. It's also worth just bearing in mind where we're sat in the context of the VIX at the moment, the volatility index, which measures fear in the market. Fear has increased over yesterday. We saw quite a big gap to the upside, and with that we saw oil sell off. We saw a little bit of a pullback on the stock market. It's nothing too significant, but that did help us to break out a little bit higher on gold and silver. I suspect over the US session today, this is where we could get moving on the precious metals. If they continue to consolidate and stay range bound, we'll be waiting for a catalyst to cause a breakout. Could be the minutes of the FOMC statement, which are on Wednesday next week, which could be a major mover for the precious metals again. But right now, they are having a natural consolidation after the gains. They're the best performing commodities this year. They're just continuing to move sideways, which is typical for summer trading. And then what we could see is a catalyst for a breakout over the month of August. So I will put that on your radar, guys, both gold and silver. Now, for those of you who like to trade oil, also look at where oil is sat right now. We had an interesting move actually last week. So we came off the 50% Fibonacci level, which takes into account the January lows down at $27 per barrel up to the highs this year at the end of May, beginning of June of 52 US dollars per barrel. We bounced off the 50% Fibonacci level just last week. We had a $4 move here on light sweet crude oil. We pulled back this morning down to the 50% level between the recent swing low, recent swing high, and now we're watching this carefully, because on a weekly time frame we have started to form a bit of a base here at that major underlying supportive level. So we are watching that quite carefully right now to see whether oil will hold onto this zone and start to develop a base here. Okay, so we're watching that very carefully at the moment, or whether we are going to just roll over, break back below the 200-day moving average and have a retest of the 40 US dollars per barrel level. So we're watching that quite closely, especially the Baker Hughes report tomorrow we'll be looking at. For us, we've caught the major bulk of this sell short opportunity with oil. We closed out of our longer term position last week, which was a significant gain for us at the Gold and Silver Club, both from swing trades, also from our active position trades as well. So we've closed out of that short, and now we're looking at the potential to reverse position, but we just need to wait for a little bit more confirmation. Also, a market which I would suggest you have on your radar is sugar as well. We did have a corrective pullback just yesterday. We've come back to a major area of underlying support around $19.50. Sugar has been one of the best performing markets this year. It's been up over 32%. The highs last week. In fact, this week it just came within a very short distance, 20 cents away from breaking out from its 2016 highs. This is definitely a market that you also want to be able to trade. We built into this position throughout this year, and there's definitely more opportunities ahead. So I would definitely also just have that on your radar. Now, in terms of our trades that we've had over the last week, we've got several new positions which we continue to be in good profits on. But if we have a look at the trades that we closed out of last week, we also caught a reversal point here when oil came back down to the 50% Fibonacci level. We've caught a nice, really good risk to reward on that trade, 420 point breakout, hit our profit target, the 21-day moving average, caught that for 420 points. Also last week, we profited on our gold trade off the back of the Bank of England, which we discussed last week on this session. The breakout that we saw on gold, we caught a 430 point breakout, and we took profits just prior to non-farm payroll on Friday, which actually subsequently saw gold pull back and offered another opportunity to add to that position. So guys, if you would like access to the same trades that we're taking at the Gold and Silver Club, you'd like to get more information, get access to our profitable live trade ideas shared with you directly for instant results, of course, you can get in touch with us. Feel free to do so via www.jointhegoldandsilverclub.com. Once you've completed the application form, we will get in touch with you ASAP. So it's www.jointhegoldandsilverclub.com. Now, in terms of what that includes, what membership includes, who it's for as well, well, essentially, if you're a new trader, it could be that you're a new trader and you want to develop a solid understanding of the markets, or even if you are an experienced trader, but you do want to just really take your trading to that next level, this is what the private members live trading room includes, okay? It includes the following. You get live trading room webinars, so you can watch the Gold and Silver Club expert traders analyze the commodity markets right in front of you, pick out highly profitable trade setups. We share exact entry, exit points, our profit, our stop loss targets with you. So we walk you through each of the trades that we're taking for instant results. You also get trade notifications via email and SMS, so you get notified every time that we take a trade. So you get alerts when to enter a trade, notifications include reminders on positions, you get the exact details that we are entering, exiting, placing our stop loss. All of the trade setups are sent out in advance notice to ensure you've got a lot of time to enter the position to get the maximum profits out of the trade, and you get exclusive access to commodity research and market insights. So you get access to our proprietary trading research, market insights to help you boost your win rate and ensure you are on the right side of the trades that you're taking. All of our research, which goes deep into the commodity markets to help you get an edge with commodities and fast track your results. So just as a summary on that, guys, as a member of the private members live trading room, you get access to exclusive weekly live trading room webinars. You get live trade setups ready to implement, real-time trade notifications by email, SMS, so you don't miss any of the trade setups. Exact details of where we're entering, exiting, placing our stop loss. You get the weekly trading plan with a watch list of trades for the week ahead, live trade support to help you through each trade, and institutional level trading research and commodity insights to give you the ultimate edge in the market. So again, to get exclusive access to our private members live trading room, all you need to do is just go to www.jointhegoldandsilverclub.com. Once you've completed the application form, we will get in touch with you ASAP. Okay, fantastic. So with that, we'll go over to any additional questions. Hey, Mauricio, good to see you. So of course, if there are any additional questions, we can go through those. Right, just so to put some stats out there, guys. So a couple of questions just with regard to the performance this year. So we've seen essentially silver has been up 45% in 2016, platinum up 29%, palladium up 25%, sugar 31%, gold 25%, soybeans 15%, cotton 14%. In fact, we didn't cover cotton today, but cotton, I'll tell you what, we'll look at that next week because that's a very lucrative market, and coffee has been up 7%. We're currently right now, it's the strongest demand for commodities since 2009. And we've got a lot of factors right now which are causing increased fear in the market, which have seen more investment into commodities. The Bank of England being the most recent, where they've cut the interest rates for the first time since 2009. Following on from Brexit, we've continued to see strong inflows into commodities. And of course, if you would like to learn how to really sharpen your commodities trading, how to make the most out of the moves that we're seeing in the markets, the significant inflows that we're seeing into commodities, by all means, do make sure you just make an application to the Gold and Silver Club and we'll get you fully set up. Okay, fantastic. So with that, guys, I don't think there's any more questions at the moment, but by all means, feel free to get in touch. I wish you good trading, and we'll speak to you, of course, very soon. And as always, I thoroughly look forward to working with those of you who will be joining us at the Gold and Silver Club. Okay, thanks, guys. Take care. We'll speak to you very soon. Cheers, guys. Bye-bye.